We interrupt all programming with an urgent financial update regarding the Iraqi Dinar exchange system, which recent reports suggest is now overloaded due to unprecedented demand. According to these claims, redemption centers and foreign exchange offices in multiple locations have been inundated with requests from dinar holders seeking to convert their notes at perceived high rates. As of now, however, there has been no official confirmation from the Central Bank of Iraq, major financial institutions, or government agencies verifying that any change in exchange systems has occurred. Yet the pressure on infrastructure appears real based on the volume of anecdotal reports. If the system truly is overloaded, it may soon trigger delays, appointment backlogs, and confusion among currency holders. In response, investors must know how to proceed carefully and how to keep their funds safe without falling for false promises. Reports indicate long lines at select currency exchange windows, both in Iraq and purportedly at partner locations abroad. Feedback from holders states that while some appointments were scheduled, many were rescheduled or postponed due to overwhelming traffic. Some offices reportedly stopped accepting walk-ins or new appointments altogether. Simultaneously, speculative chatter in forums asserts that redemption centers are operating at greater capacity, but cannot handle demand sparked by rumored rate shifts. What stands as uncertain is whether these developments are tied to actual policy changes or are simply the result of rumor-driven surges from deep-hold investor communities. Even if volume is real, no documented change in rate authority or approval mechanisms has been presented. It is essential to understand that even an overloaded exchange system does not validate a change in policy. The current official rate remains fixed at roughly 1,310 Iraqi dinars per US dollar, with the parallel market trading around 1,460 to 1,470. There has been no formal announcement to suggest redenomination or a massive appreciation. What we may be seeing instead is a wave of demand fueled by speculation, misinformation, and anticipation, pushing unprepared service providers to capacity. Those who believe they stand on the verge of conversion should proceed cautiously and verify every claim through reputable institutions before handing over funds or notes. If you believe you have missed the window due to overload, the first step is not to panic. Do not make immediate financial decisions or follow pressure tactics. Instead, contact the entity handling your appointment directly. Legitimate redemption centers or licensed exchange offices will communicate clearly about rescheduling policies, queue management, and anticipated turnaround times. No authentic institution should expect full payment or full note submission upfront without formal documentation, a review of identity, and a clear contract. Any demand for immediate payment or threats of losing your place if you hesitate should raise alarms. While overload is inconvenient, it may serve as evidence of interest, but not proof of official change. Investors should ask for written confirmation of appointment details, including date, location, rate, booked rate period, document requirements, and timeline for actual conversion. If you have access to these details, compare them against the institution's known practices. If they deviate drastically, promising overnight revaluation, high contract rates, or bypassing anti-money laundering checks, they may reflect misleading or fraudulent operations rather than actual system upgrades. For those who fear they missed out entirely, understand that most exchange systems have policies for overflow handling. You might be placed on a waiting list or given a new appointment date. Do not jump to alternative venues until your place under the original system is clarified. Checking with local regulators, currency boards, Iraqi embassy consular offices, or finance ministry hotlines can help verify whether facilities are officially sanctioned. Be especially cautious of private operators claiming to expedite your conversion through VIP access or tiered queues. These often come with upfront fees that offer no guarantee of completion. It is also important to balance urgency with documentation. If the exchange rate used at appointment time is not explicitly documented, as in a signed contract stating the rate and the exchange cap, then future disputes may arise. Always insist that the terms of conversion, including applicable rate per note or per tranche, be laid out in writing. Otherwise, vague promises may collapse when chaos intensifies. When a system overloads, providers may be tempted to renegotiate terms or delay conversions indefinitely. That risk increases when no signed agreement exists. At the same time, be aware of the broader environment. The Central Bank of Iraq, along with international regulators, frequently issue warnings about redemption center scams and speculative revaluation promises. If volumes are surging, but without any certainty of policy change, this may represent another wave of misinformation driving traffic rather than genuine monetary reform. The only credible evidence of a rate shift would come from official public statements, regulatory filings, or affirmation through licensed banks and government agencies, not from rumors or private messages. Therefore, the best course of action after experiencing overload is to document everything. Keep copies of any confirmations, emails, screenshots, or messages about your appointment. Track phone numbers, dates, staff names, and facility locations. Should you later need to dispute charges or report misconduct, this paper trail will be essential. Avoid relying on third parties who claim they can help expedite your position. Often these individuals lack transparency and may be operating outside of regulated frameworks. Meanwhile, financial professionals recommend diversifying risk. If you hold sizable amounts of Iraqi dinar, consider consulting licensed advisors or legal counsel before proceeding further. An overloaded system may invite errors that could result in misplaced notes, identity misuse, or delay tactics. Taking precautions, including splitting holdings between different verified channels or retaining part of your holdings until confirmation, is a prudent strategy. High-value holders might request banking documents proving compliance and transaction settlement before transferring notes out of personal possession. Another key factor to monitor is whether providers offering the exchange have appropriate licensing. Redemption centers that partner with authorized foreign exchange offices, or that operate under contracts with regulated banks, are far more likely to deliver legitimate conversion. Those that lack visible licensing credentials, or that change venue location frequently, should be approached with extreme skepticism. If you are on a waiting list at an overloaded center, ask for copies of their government license, registration, and compliance with anti-money laundering statutes. Authentic operators will provide this without hesitation. If the overload leads to long wait times, some individuals may explore secondary options. Yet transferring notes to another venue carries risk. You may lose your position in the original queue, create duplicate claims, or fall victim to duplicate scams. Avoid double booking or paying multiple sources for redemption of the same notes. If you choose to move your application to a new provider, get clear cancellation terms from the first one and insist on transaction receipts. In many prior cases where overload has been claimed, delays stemmed from